Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. We have stocks going gangbusters before non-farm payroll, but before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. If you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. All right, let's go. We got non-farm payroll tomorrow, but the market's melting higher ahead of it. Hey, where's that bear market everybody was telling me about? So, you know, I mean, we're touching 42.31 here today. That's a big major three-star resistance. We didn't hit that intraday on Tuesday's session. So keep that in mind. Closing up here, closing above that is really very bullish. The NASDAQ pinging exactly 14,500. A lot of these levels that we're seeing, especially the NASDAQ, they're all lined up on the Morning Express, so check it out. Really big, though, again, as markets sold off last night into 41.80. Again in a retest this morning, 41.78. That's major three-star support. I highlighted that yesterday. That's our level. You know, I was it the Fed talking a skip, or was it our major three-star support yesterday that got things going? But I'll tell you what, today's move, it definitely feels like there's some staying power, but that is going to matter about non-farm payroll. I mean, we have non-farm payroll tomorrow, 180,000 jobs expected. It's I think 4.3% is the wage growth expected. 0.4 month over month expected. These are pretty high, elevated wage growth numbers. So, you know, if we come in below that, that's going to be a tailwind. And it's really all about the wages. The labor market remains extremely tight right now. We had the jobless claims came in a touch better than expected. And you had last week's just revised slightly higher. But with that, ADP came in super hot. And then we had the real story of the day, I think, was the unit labor cost. Came in below expectations, I think 4.2 or against 6.2% or something. That was a revision for quarter one. Remember those quarter one numbers? A lot of distortions through there, so the final revisions have been a little more favorable for what the Fed wanted to see. And then the ISM manufacturing report. ISM manufacturing contracted, the prices contracted, the orders contracted, but employment expanded at over like 51 or something. So you're seeing the tight labor market as the economy slows. I think the Fed is going to have to focus on the slowing and cooling prices before they really emphasize the labor market. I think we're just working those distortions out, and the labor market's going to fix itself in the coming weeks. But the skip that was highlighted by the incoming Vice Chair Jefferson yesterday, Philadelphia Fed President Harker yesterday as well. I think we're seeing that being a tailwind in the market. The stronger than expected Chinese manufacturing, which finally expanded, that's been a tailwind. So we're seeing all that here. All the levels in the Morning Express for the NASDAQ and S&P are there. But now let's move on to crude. Crude is touched $71. It ran into rare major four-star resistance, 70, 50, 71. I always talk about a previous support is now big resistance, and that came in pretty big here today. Now, this EIA report was not bullish. We had another 2.5 million barrels of SPR released, something like that, and the overall number was a 4.4 million barrel build. You know, that's the real story. I think I'm looking at it now. There's a lot of data going. My 4.4 million barrel build, yeah, is refinery utilization ticked up 1.4%. I mean, this is a number that's really coming off the heels of last week's. That's what's important. A big draw of last week's of negative 12. On top of that, net imports were up 7 million barrels week over week. So you have that distortion working through it. But the market, I mean, I think it's feeding off the Chinese manufacturing. It's feeding off, you know, the labor market's still tight. I think the crude oil has responded when the job growth is showing up, and then the Fed cooling. So the dollar is down sharply today, bringing a big tailwind to commodities. Again, that started somewhat last night. We spiked up again this morning, though, but now we've given those gains up. The dollar's down about 0.75%, and that's been a huge tailwind to metals. Finally, the metals are waking up a little bit. Gold touching 2,000, silver touching 24 bucks. Platinum trying to get out of the hole. Copper trading above 370. These are big moves. We need some confirmation into the weekly close, though. All the levels are highlighted on the Morning Express. All those levels are there. I've talked about it there. Talked about the U.S. dollar, USD CNH, which is that CNH tradable futures. Now, that's not giving up any ground. We also have the OPEC meeting going in tomorrow. I'm going to be on Yahoo Finance tomorrow morning at 9:45 a.m. Central Time talking about crude oil and talking about OPEC. Check it out, Yahoo Finance Live. And remember, our team is always here to help. Give us a call, 312-278-0500. Remember, futures trading involves substantial risk of loss. It's not suitable for all investors.